This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Welcome, everyone, to the 12th episode of The Banker's Bookshelf, which is a podcast where I invite authors and researchers of very interesting books, which are finding a permanent space in the libraries of curious bankers and fintech entrepreneurs. And today we make a reverse episode because we'll have the opportunity to discuss my own literature, in particular my latest bestseller, Banks and Fintech on Platform Economies, Contextual and Conscious Banking. And for doing so, I have invited Panagiotis Kriaris, who is an expert of platforms and ecosystems, for an open conversation that might start from a literature but can definitely expand into his expertise and words of wisdom. Panagiotis, welcome to the show.
Thank you. Thank you, Paolo, for the invitation. Pleasure to be here.
So, Panagiotis, first of all, can you tell the audience about your work? I follow you on LinkedIn and invite everybody to do so. You have a huge readership and always very interesting perspectives, which sometimes go really in the details of how the platform economy works.
Yes, thank you. So I'm working in financial services for quite many years now. Different areas like banking, payments, fintech. So I find that this space is fascinating, and I think it's fascinating to understand how it has evolved over the years. Every now and then I'm just trying to try and explain or simplify things for various topics, be it banking, be it payments, be it fintech. And I think that's what we would like to do today. And I think there is a saying, they say you don't understand a topic well enough if you're not able to explain it in simple words. So that's what I'm mostly trying to do. And let's see how well we can manage to do so today.
And I think you are successful because every time I read your pieces, I'm enlightened and I learn a bit more. And I tended to work on social media discussing things that I learned from my extensive travel at IBM, but also positioning some pieces that come from a literature, as I've been writing 5 books in the last 7-8 years. And this last one is really on platform economies. I do believe that the future of financial services can be realized with digital technology if fintech entrepreneurs and bankers understand more how to open up their business models and architectures to different kinds of interactions, which allow people and actors in the ecosystem to basically access value in different forms, which requires an institution to define and generate value differently.
I mean, for me, like you say, platforms and economics is probably the dominant business model, not only of now, but of the future. So it's very interesting for me, your idea about, combining and trying to explain how this is influencing not only the banks, but also the fintechs, and kind of trying to explain how the interaction is taking place. So how did you, what was the inspiration for trying to do this, very interesting comparison and try to deep dive on the topic?
Well, Panagiotis, I have a kind of a mixed type of career in the sense that I've been a banker, quantitative risk manager. I built my startup in 2008 that focused more on digital wealth. That was bought by IBM in 2013 when I entered more into the technology stack, if you like, but made of exponential technologies like artificial intelligence. So in this journey, I always wanted to understand how banks could cope with the new normal created by the global financial crisis, which means their economic model was supposed to change, still is supposed to change, and only technology can allow them basically to reposition the various elements of values to engage clients and generate a different form of value. And I remember a speech of Mario Draghi in the press room of the European Central Bank in 2019. That was 2 weeks before he left office and Ms. Lagarde became the new chairman of the ECB. And he was talking to the journalist and he told people that in order to box out from a very complex situation where the economic model of many banks, in particular European banks, is overstretched, banks have to adjust the business model to the digitalization of financial services. So in essence, they don't say the banks have to digitalize existing business models. You lift and shift what you're currently doing, you put them on cloud and everything works. No, the focus, and when central bankers talk, words matter, the focus is on the business model. So I started thinking, okay, now that I've learned a lot about fintech and technology, what is the change in the business model that needs to be created in a way that banks can effectively succeed in transforming and becoming more economically viable, economically sustainable? And to do so, I've been looking at everything I've been seeing around the world as I continuously travel to meet clients, to meet fintech entrepreneurs, and to talk to the ecosystem. And I remember once I was in China for the opening of our IBM office in Shanghai, still in 2019. And I was talking to the CIO of a very interesting Chinese bank, one of the most digital banks in China. And I was talking about the difference between focusing on volume, that means transaction, right, where margins typically commoditize, you don't need to build, uber volumes to survive, and focus instead of value that is part of the client relationship. And what this client told me is that was very interesting because they created ecosystem platforms in the last few years, but they might have made a mistake trying to compete with Alibaba or Amazon in the Western world, which dominates the volume business in front of consumers, in particularly the retail clients, while instead they had to think about the value that Amazon and Alibaba cannot generate in front of the client and basically put it at the front of the relationship. And so they got me thinking, if you like, and that's where I started conceiving this book, Banks and Fintech on Platform Economies, that looks at all of the revenue mechanism of an institution and tries to requalify them in a way that, yes, you leverage technology, yes, you work on platforms, but you're different from the players that are operating and succeeding in e-commerce, for example, because the tender is very different. So we need to understand the differences to understand exactly how to do the same, but with a different modality.
I mean, by the way, because you mentioned the client relationship, and I think for me, that's one of the most interesting points. If you look at the transformation that banks are undergoing or that they have to go through, for example, banks used to be a monopoly in terms of, having the client, owning the client relationship, right? And if you look at what's happening now with platforms and, what you have now been explaining, you see lots of other players trying to enter the game and entering the game and actually being the ones that are controlling the client relationship. And then you have a question mark as to, okay, what is the strategy that banks can pursue in terms of, okay, am I in a position to still own the client relationship? And in which format, what is the business model, what works? And, maybe sometimes, and we can discuss, you are seeing business models whereby you have banks positioning themselves maybe on both fronts or maybe on the front on the infrastructure side. So for me, that's a very interesting kind of question to understand what have you seen working across the globe and what doesn't work, and maybe, for example, there might be differences across geographies.
Well, there are a variety of different business models that engage clients and partners in different forms. And definitely what can work in Guangdong, China, but not necessarily be fit for purpose in places like Germany or Canada, because the regulation is also different. And on top of this, the adaptation of clients to digital life is not necessarily the same. So we need to understand what's in common, but also the big differences. But I think that all of these models, if we can start from a conceptualization, can be understood when revisited or aggregated along two major platform strategies, which I saw emerging worldwide. And that is what I call the conscious banking and contextual banking, that would mean advisory platforms or embedded finance. And to discuss how they take shape and form, but also how they are starting to interact and basically cross-pollinate each other's, I defined in these banks and fintech and platform economies the so-called banking reinvention quadrant, which is a value space that allows you to understand where you are today with your organization or institution and where you want to go in the future, knowing that not every bank will want to be exactly the same going forward. Now, the banking reinvention quadrant is based on two axes. Axes are needed that are information and communication. Now, I remember there is a very nice paper of the European Central Bank that goes in the same direction in terms of discussing a topic, where the central bank researchers and analysts say that what makes banks successful is their capability to excel in information and communication. So information is every data that you have inside the core banking system, if you are a banker, that comes from the payment system, so the transactions, the cash flows, understanding of happens every day with a client, as well as the adverse selection, so the analysis of credit, because you need to lend and clients wants to borrow money. And what the central banker said at the time is that, especially in places where interest rates are very low and the cost of capital is very high, it's difficult for banks to generate value inside their core banking system and processes, the core banking center processes. So it is necessary to open up to the ecosystem in a way that banks can position what they know about the client outside their immediate perimeter, in a way that clients can be served and followed on a journey that starts from a different perspective, starts from a different industry. And that is the reason why we saw the appearance of regulation around open banking. There was the PSD2 originally in Europe that is now evolving into open finance. So the understanding that there's way more that can be done to service a client by positioning the banking value on particular type of transactions outside the banking perimeter, inside a different journey. But on the other side, the ECB was also recognizing that communication in many places around the world is becoming even more important than information to generate revenue and value for shareholders. And that is basically the interface that banks put in place when they want to discuss with clients investment opportunities as well as insurance contracts or a bank assurance model. And that's very different from information, because that typically is based on human relationships. So now the question becomes, how can you digitalize these human relationships? And how can you add value to these human relationships, knowing that most of these products are seeing and experiencing a contraction of the margins? There's that much you can do in terms of value. So you need to add more value to the relationship to invite clients to pay for their relationship. And that's where you invert the framework here. You take value from outside the banking perimeter, like the fintech, and you bring it inside into a banking-led relationship where basically you justify the fees. So to the point of your question about the client relationship, on the one side, you position the relationship outside your immediate domain, that's embedded finance or contextual banking. On the other side, you orchestrate that relationship, but not necessarily you own it as in the past, because you become a platform for the advisors, where the relationship is spread out into different conversations that happens between the advisor and the client.
I mean, a few points, because I think you mentioned lots of good topics. So on the one hand side, going back to your, to what you mentioned around open banking, I think the idea was exactly that banks used to have a monopoly on the data, right? They were the ones owning the data. And I think if you see what has been happening with PSD2 and the likes, you have the regulator saying, okay, now you have to open up the data, right? So you need to allow other players to get access to the data, which is a way for you to trigger innovation. And then banks can, of course, be the ones kind of making use of the data, but they should not be the only ones. I mean, one of the main challenges of such frameworks that I think that it's now being addressed under PSD3, which is coming, is how do you monetize? What is the remuneration? I mean, under PSD2, banks didn't have a very strong, let's say, incentive to give access to their data, and this is something there was no business model or monetization model behind. That's something that's now changing. On the other hand, I mean, and you mentioned, I mean, for me, all this explanation that you gave around the banks going beyond, I think this is what we typically see as the beyond banking, meaning that it's not enough to stay within your core, but in order to add value to your customers, you have to sometimes go beyond and see what is the, what they are. I mean, the customers, they don't care about your needs, but they care about getting a service. And then if this service implies that that you need to open up your ecosystem and your services, then I think that's something that you can do. The question is, if you can really, how can you compete with other players that are now going out and offering services? You mentioned embedded finance. I think that's one of the main changes that has been taking place over the past many years. And then we also have the discussion with banking as a service. So maybe we can discuss a bit how embedded finance and banking as a service are, what is the relationship? I think there is a lot of misunderstanding when it comes to explaining these two terms. So that might be a good topic to look at.
Well, so I also do research in my role at the IBM about a variety of topics. And one piece of research we published last year was exactly on embedded finance. So I wanted to have new and fresh data around the world about what banks are effectively doing from a strategic perspective and from an implementation perspective. Now, embedded finance is a loose term in essence because it contains a variety of things. It can be a simple connection through an API to another system, can be maybe a sub-provider that contains elements of a bank, and can go up into the full orchestration of an ecosystem platform that doesn't start from the banking relationship, but from a different relationship and leverages that new interaction basically to bring inside elements of value from banking whenever they're needed for the clients. So now the evidence is that the majority of banks are now considering embedded finance in one or the other form, like essential or complementary to their business strategy. And almost 20% of banks are already live with an element of embedded finance where they either created a marketplace with APIs to power up a different institution to basically leverage financial elements. It can be a banking as a service to power another bank. Basically, they use the full stack in order to create a new banking relationship, or it can be a corporate that instead wants just a piece of the banking capability without having to basically tap into a banking license to provide to their customers elements of value. It can be buy now, pay later, for example. So they all need to base on a banking as a service stack that allows others to consume the banking services outside the banking perimeter, inside or outside the original banking perimeter, inside their own business perimeter.
But Paolo, in this aspect, would you say that, for example, we have, because for me it's critical to understand what is embedded finance and what is banking as a service, and for me it's like the two sides of the same coin. So you have embedded finance, which is, let's say, the front end, and then you have banking as a service, which is the infrastructure behind.
Yes, the banking as a service is more like a technical perspective, if you like, that creates the capabilities, but in itself is not a business model. The embedded finance instead is the business model that leverages that infrastructure in order to generate value. And that's where complexities occur, because many people think that The technology is the business model. So as long as I allow people to consume my APIs, I will make money, very transactional. In reality, that is not the case, because there's some sort of a transformation of the value out of transaction into a different type of engagement that requires people to conceive that differently. For example, when I asked 1,000 bankers last year how they define the KPIs for their embedded finance strategies, most of them were very like, well, I make revenues on transactions, API calls. But when I asked the partners of these banks that have to use the banking as a service to basically increase the value of their client journeys in their domain, they said, my value is 24/7 support, the capability of deploying a new use case in 3 weeks instead of 6 months. So all elements of, if you like, performance that are not necessarily related to the transaction itself. And discussing this element among partners is essential. Otherwise, there's not a consensus about what effectively has been created and co-created together. So what I find interesting, therefore, is to look at those banks who decided not just to partner, but to do the last mile, so to create themselves an ecosystem platform that operates outside their banking perimeter, that basically allows them, therefore, to interact with that ecosystem platform in order to position the banking value. And I give you 2 examples we've been working on with colleagues. One is Bradesco in Brazil, and the other one is State Bank of India in India. Bradesco, a couple of years ago, decided to launch eAgro, which is a non-bank, is an ecosystem platform that wants to aggregate the work of 50% of the Brazilian GDP that is generated by farmers. Farmers are all micro or small, medium entrepreneurs, and their problem is not necessarily to do banking. With a bank, the problem is to grow their crop, to decide, how to grow it according to different weather conditions, and therefore to trade once that is matured and can be harvested. So what the platform in this case does is try to focus on the work problem of these agents, which are small and medium entrepreneurs. And of course, along their journeys, they may need to optimize payments to have them instantaneous, or they may need to get leasing for the machineries. And that's when the bank becomes valuable, but it's valuable outside the branch, inside that platform. So wherever and at the time the client needs it. Another example instead for the retailers would be State Bank of India. They launched a marketplace, which is like an Amazon in India, where they can buy goods, that has a digital wallet at core that allows to transform the banking relationship through the digital wallet, while merchants and consumers get together in a matchmaking that the platform generates. But only then, with a different understanding of the client on the platform can be proposed wealth management or investment management opportunities. So these are 2 examples where it's the bank itself that decides to create something else outside, as a partnership where the bank becomes the banking as a service that nurtures basically the banking elements inside that platforms. But in a sense, they work on both sides of the equation. And it's just one of the most advanced, because effectively the bank needs to decide to sort of cannibalize some of the relationships and position them into another perimeter. But it's equally so if you strike a partnership with an existing platform in a different ecosystem or a different industry, and you decide to service those relationships in a distant modality.
I mean, the dilemma, as you mentioned, is about the customer relationship. I mean, do you go and service this front or not? And that's what makes the difference between banking as a service, which means staying in the infrastructure level, and then going beyond and trying to own the customer relationship as well, which would be the embedded finance. I mean, what I've seen is that most of the banks, and of course there might be exceptions, that most of the banks or some banks are having difficulties in addressing this model, only because being able to excel in embedded finance takes different capabilities than the traditional banking. I mean, be it a very strong focus on the tech side, being the customer servicing side, being a different setup on the risk side, understanding also the platform side of things, and how this is working versus the traditional relationship setup that they were used to. So I think these are things that some banks still need to master.
I think Panagiotis is also the problem of defining value correctly that allows the banks to understand what is their role in participating into an embedded finance strategy. So let's go back to the definition. Definitions can be powerful.
Mm-hmm.
So what is embedded finance, or in the language of my banks, Fintech or Platform Economies, what is contextual banking? So it is the opportunity to eliminate the ecosystem friction that allows banks to be contextualized, so sort of becoming invisible, to generate new value. Now, words matter, like if I'm talking as a central banker. The key point is that when you eliminate friction, you're not necessarily adding value for a business by asking clients to pay for the friction elimination. The elimination of friction at some point is considered a given that everybody needs to have, but it's the one that triggers a network effect, allowing consumers to be happy to be on the platform instead of somewhere else. So the focus is that value is shifted somewhere else. So now I give you an example. I was in Brazil some days ago for the launch of my latest research on small and medium enterprises, banking for small and medium enterprises. I was talking to quite a number of bankers that has a responsibility in the field. And there's one in particular is a large bank in the area that launched the same week a marketplace to do matchmaking between merchants and consumers, so allowing them basically to find the new clients online. Now, the discussion immediately was steered around the payment issue, right? So how do they compete? So basically, they can provide that matchmaking, allowing the transaction to be less expensive for the merchants and the consumers. So there's a lower fee, so that they might rather prefer to do the transaction on this platform instead of somewhere else. But then the client clearly explained that the value was not a competition in the transaction space to become more prominent in payment. The value was understanding more deeply what happens across the actors of the ecosystem in order to have more data that can be used to power the risk management framework, because only by giving risk management more and valuable data to understand the dynamics of an ecosystem that typically is unstructured, because in the SME market you don't have annual reports or formal reports that you can access, you can basically be more comfortable in lending to this marketplace, so you can expand your portfolio by keeping the risks sort of at bay or better managed. So then you see the justification is not in the transaction, but is the capability of the bank to do better risk management. That means the KPIs needs to be discussed inside the institution in completely different ways than just looking at the fate of that specific business model that is the platform dynamics as you see them pretending to become yourself in e-commerce, while you're not doing that. You're trying to do something very different to power up with more data your core business.
But this is exactly the case, right? I mean, in this case, you're basically using data on the one hand side for the risk side, for the risk assessment, and then on the business side as well. And the question is, in this case, banks were used to, let's say, do, for example, the risk assessment on a very different scale, on a very different basis. Now they have to use all kinds of alternative data that are coming in the ecosystem from all kinds of angles, and then use this data to monetize and to provide added value in many, many different directions, which was not the case before. So that's an example of how this ecosystem is creating opportunities for.
And another way somehow can be, how can you help your respective clients to be successful? So if you build a network and orchestrate a network of small and medium enterprises, all of them as the core issue of expanding their business, right? Being more efficient, acquiring more customers. So can you then provide them with analysis that might be needed for them to understand the cash flow projection? So you need them to share with you the data. You need them to basically make the data available on cloud so that it can be analyzed, and you can give them back a value which is coming from the banking expertise, so that you also, in a sense, nurture the health of the ecosystem you're working with, which has positive, if you like, effects in terms of the quality of your lending portfolio, all in all. So this has to be considered as the way the bank interacts with your economy, with differences along the different commercial segments or industrial sectors.
And in this direction, I think it's very timely to point out that the biggest opportunity that banks have is the SME segment, right? I mean, this is a segment that is not serviced very well. I think you mentioned in your example. So the more you can go beyond what a typical banking service would offer, and the more added value, the more points that you can offer on top of your core, I think the more you are going to be creating this ecosystem, and you are also going to be able to monetize from additional services, including lending. I mean, for example, what comes to mind is the so-called, if you look at platforms, the biggest trend that is happening as we speak in terms of the lending side is what we call this merchant financing, and the different ways that you can finance the merchants using alternative data. I mean, merchant volume-based financing is one example. So for me, this is where most of the opportunity lies.
And Panagiotis, therefore, you'll be happy to know that this is episode number 12, focused on banks and fintech on platform economies. But episode 13, the next one, will be dedicated to this latest research, banking for small and medium enterprises, where we discuss with some of the authors and researchers about this. Why does it matter? It matters because 90% of the firms worldwide are small and medium enterprises. 70% of the employees work for a small and medium enterprise, and 50% of GDPs is generated by small and medium enterprises. So super relevant for the economy, but also a huge opportunity for banks that see the commoditization of consumer banking to basically tap into this market with technology, try to grab and generate a different value. And I'm seeing most of the new banks have been investing in the last 2-3 years to tap into the SME market. So that, I believe, is where the platform competition will intensify in the next 5 years.
And okay, given that you're discussing this in the following episodes, I don't think we need to focus. I just will mention that, for many years, banks were not able to service the SME segment correctly, only because this was not profitable for them. So the idea of being able to understand the needs of the SMEs, they could just not simply do it, even if they were their customers. Now with technology and with all this segmentation and data, this is possible. And I think the marketplaces are where the SMEs are. So if you can go there and get all this model that will help you, have a granular segmentation that will address the needs of the SMEs, that's the name of the game. But I guess you're gonna discuss about this in more detail in
Yes,
your.
and if you like, thinking back to the banking innovation quadrant, which has this tension, information and communication, SME banking is really in the middle of the two, because on one side you have the information required to serve them differently, lowering the cost to serve in a way that you can have a competitive risk management while doing risk management and give them funding for lower cost. But on the other side, all evidence suggests that SMEs need more than just access to banking. They need advice, because they're looking for someone to understand how they are investing their money to the future to grow and get some information about the likelihood of their success, which was a clear evidence of this paper. That leads into the discussion around the advisory model. So can banks also power up a platform for advisors that can serve SMEs as well as individuals, being retail client or wealthy clients? And that is on the bank innovation quadrant, the second platform strategy, which is called in banks and fintech on platform economies, the conscious banking. That means a bank which is transparently engaging with the client, helping them basically to make different and more substantiated investment decisions. And even in this case, Panagiotis, let's go through the definition. So definitions are revealing. So when we talked about contextual banking in the direction of embedded finance, we said is the opportunity to eliminate the ecosystem friction that makes banking contextualized, that means invisible, to generate new value. And we said the value is outside the transactions. In conscious banking, we say that it is the need for the bank to eliminate the knowledge friction, that means the difficulty of clients to make more complex financial decisions, that makes banking conscious, that means transparent, to generate advisory platforms that allow, in a sense, to master the shift which is happening of profitability out of products, financial products are commoditizing into the relationship. So that basically allows to generate hidden value. There's value in the banking relationship that the bankers have not been capable of demonstrating to the client and being paid for. And that's a time when technology can allow them to better demonstrate the value of that relationship irrespective of the products that they have on display. That means it's not a marketplace, is an advisory platform that generates value through the relationship for the client. So they think it together.
You're basically going from products, from this product-centric view to the needs. You're servicing needs, right? I think that's the big difference versus when looking at the traditional, traditional business models or not.
Yes, it's what is called a shift from outputs, which are products and transactions, into outcomes, which is what you're doing with these products and transactions. On the contextual banking side, you position it into a non-banking journey. In the conscious banking, you position it into the liabilities of an individual. So you need this because you need to fund something for the future, right? So you need to put it in the context of the life of your clients. And I think this is also emerging because we see the effect that the commoditization of products have been very strong after the global financial crisis. Think about passive investing versus active investing. There's a strong difference in terms of the basis points that can gain by the intermediaries, which invites them, if they cannot build uber volumes, to basically ask the clients to pay for their relationship. So it's the idea that the planning or the advisory model becomes more pervasive, but the bank cannot keep on working the way they have to work. So they need to power this network of advisors, because that is where the value is basically generated, and it requires to conceive the relationship with the client more spread out, but also to provide these advisors with the power that comes from the bank in order to systematize the job with AI, for example, to help them serving more clients for a lower cost.
And in fact, it's the only way that you can, kind of address the problem of commoditization that you mentioned, right? I mean, the only way to do this is to distinguish yourself from the mass market, and the more add value the more value you're adding in different directions, the better it is, and the better you can service this outcome.
And how do we do that? And now let me tell you a personal story, Panagiotis, that is taken from the book that might also allow us to close this episode. Thinking about what happened at the beginning of the internet revolution, when people started creating marketplaces to sell products to the consumers. I helped my brother in the 1990s to build the Amazon of Italy. And you might not have heard about that, but we had the best products on earth. So I thought transactions, will be going through the platform like crazy, because we had Italian fashion, we had Italian food, we had Italian furniture, we had Italian travel. I didn't add Italian football because soccer in Italy is not always at the top, depends on the years. So I really thought I have the best of the products on display. I have a marketplace for those. I'm going to sell. I didn't sell anything. That's why I never heard about this startup, because it really didn't work. But we had a wonderful website, a slick design, best products, no transactions. Now, many years after, I listened to an interview of Jeff Bezos on 60 Minutes that was shooted in the 1990s, early 90s. You remember, because you're my age, that at the very beginning, Bezos created Amazon to sell books. So Amazon primarily was a bookshelf, right? You would consider it. So the journalist asked Bezos, what's Amazon? And Bezos said, Amazon is not a distribution channel of books on the internet. And I'm like, no, it's not. No, it's not. And now ask yourself, and invite the audience to ask themselves the same question. Is a neobank, is the mobile app of a bank a distribution channel of banking products on mobile? Because it's exactly the same question. And the answer is no. So Jeff Bezos explained to the journalist why that was not the case. So he said, the publishers are sending me letters today telling me that I'm stupid because I don't understand marketing. Now, call Jeff Bezos stupid. And the reason is because he said he was allowing positive and negative reviews to be published on the platform. And these publishers were saying only publish positive reviews so we can sell more. Now, reviews can also be abused, so always have a regulatory perspective when it comes to financial services. But Jeff Bezos said they don't understand because they are not my clients. My clients are the people that come to the platform and they cannot take the book in their hands. He picked up one, smell the glue, right? Turn it, look if Brett King has been endorsing this one like on mine, and basically make a decision. So he said the positive and negative reviews are that element that generates trust for them to not be dormant, basically to start making transactions, right? Because otherwise they don't know how to act. So he said they needed an element of transparency to ignite those network effects. And then he said that means that the role of Amazon is not to be a distribution channel of books on the internet. The key role is to advise, and use the word advise, the client on which is the best book for him, for her, for them to buy. And if that was not enough for me to say, wow, he added, you see, only after I use data, today we would say use artificial intelligence to understand more the client and propose something else to the client. So in essence, to me, the point is, we need to learn to be successful on the platform economy. First of all, how to data enable clients to basically act on the platform, basically to identify which are the three elements of transparent advice that ignites the network effects. And only then you can power a data-driven bank that does more in front of the client, wherever the client is seated, inside your perimeter, outside your perimeter. But it's the redefinition of value and the role of advisory of the bank that will benefit any type of interaction banks have on the platform economy, being contextual or conscious banking.
Good example with Amazon, and I think for me the bottom line is that the value chain has changed quite a lot. And the question is, how do you position yourself? Where do you position yourself? And then sometimes it might be the case that you have to position yourself in parallel in different places of the same value chain. And then you have to adjust your strategy accordingly based on this positioning.
And then you see, it comes a time like today where we're now comfortable in buying books on Amazon, right? So we don't care about that anymore. But there was a time where that was the key issue. So we always need to understand what keeps the client distant from us if we're bankers or fintech entrepreneurs, because many assume too much in the power of technology, but they don't understand the biological and psychological elements that create a distance between the two parties. And that's well addressed in literature. So I thank you for the conversation that you allowed me to shape around my banks and fintech on Platform Economies. And I know, because I always do, that the Bankers Bookshelf audience learn from you in this conversation. And I invite every one of you to follow Panagiotis Kriaris on LinkedIn or other social media platforms, because it's always worth it. So is this the major way to reach out to you, Panagiotis, or these different forms?
No, I mean, I think whoever wants to find me is easy to find me. I mean, we are now living in a society that everything is, very easy. Everything is online. So do reach out, and then thank you for a good discussion. I think it's always very interesting discussion with you, and great work on the book.
So the pleasure was mine. So it is now clear that the Bankers Bookshelf is a great opportunity to learn all together about the business transformation of financial services with technology. And this is typically focusing on a very prominent books and research pieces, which are finding their space in the library of curious bankers and fintech entrepreneurs. Stay tuned. We have a new episode coming where we discuss banking for small and medium enterprises. Arrivederci a tutti, and enjoy the jingle.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.